Well, welcome everybody to my Market Insights. Steven Sitkowski here. Glad to have you with. It's an absolutely glorious day here. I'm happy to announce that I was able to get in a couple of more days of skiing before they closed the resorts for the season. We got a little bit of snow last week, so it's kind of the best of all worlds. The snow conditions pretty nice, but temperatures were nice. The sun was out. It was fabulous for an otherwise horrific ski season. Man, we just did not get any snow. But you know what? When that is your biggest problem in life, you got a pretty good life cooking, wouldn't you say? I count my blessings for it every single day. So, hope all of you are doing fantastic. Um, Quick reminder that what we do here is for educational purposes only, should not be intended as investment advice. So, what's moving the markets? Well, apparently things in Iran are far from settled. I think we've heard 4 or 5 times, hey, everything is okay. We've got a deal. Things are looking good. And then about, I don't know, anywhere from 1 to 3 days later, not so much. Have you noticed that? So I thought, based on market activity and last week and prices of oil, it looked like everything was moving in the right direction. But then apparently we struck an Iranian cargo ship and seized it. I got to be honest with you, I don't know all the details of it. I'm not sure anybody does for sure, other than the principals involved. And now we're back to, if they don't do this, this, and this, we're going to blow them up. And anyway, that's not a political commentary. That is, I don't know what's going on over there, what's going to happen, but I can tell you it's definitely going to influence the markets. So, we went from screaming ahead last week on basically every indices. Today we're down a little bit, and very candidly, I'm surprised we're not down more. I would think that with this announcement, the market would be down 1 to 2%, but so far today, it is not. But as I record, the day is early. S&P and the Nasdaq both hit record highs last week. So it's interesting. It felt like the markets were in trouble for, I don't know, better part of 2 months. And just like that, record high territory. Tells you about the resilience of this marketplace. Fairly slow week for data. The next week is going to be more interesting because we're going to get some inflation data coming out. I'll kind of take you through what the announcements will be this week before we're done. 10-year Treasury trades a bit lower at 4.254. So that's encouraging. Lower interest rates helps everybody. And oil prices, because of what happened, rose to $88.97 per share. We're still a long way off of that $111 a share per barrel that we were looking at about a month ago. So, we're kind of between where we started in the low 60s to where we hit 111. So we're kind of stuck in that middle range between those two numbers. Let's get it back down, shall we? That's only going to happen if we get a resolution in the Middle East. Last week's heat map, a thing of beauty, unless, you were an oil company and those did not fare so well. And that's because their prices had gone up so much, because oil had gone up so much. Oil pulls back. This is going to pull back. But man, the rest of it, there were some monster returns out there. Microsoft, I've been banging that hammer, up 14%. Nvidia, up about 7%. Alphabet, formerly Google, about 8%. So, just as you might imagine, we get record highs. There's obviously Plenty of good news to spread around. What a comeback. So we went from oversold, that's what OS is, to overbought. We did that in 11 days, the shortest period of time in history since 1950. Is that crazy? The markets were just waiting. They were poised. Everybody wants markets to go higher, right? And looking for a reason to buy. And they got it on these announcements that so far about Iran have yet to stick. So let's hope they do that moving forward. So the script has been flipped. Emerging markets year to date up 14%. So that's overseas investment. Small cap stocks up 10%. Mid cap 9. NASDAQ up 4. The S&P up 3. But I want you to look at this value versus growth. That is not going to stick. I'm telling you, at the end of the day, investors want growth. But, from time to time, you get a little pullback in that area, and we have. Forward PE is still looking reasonable. So this is the S&P Information Technology, and it's still below its 10-year average, even after the recovery. By the way, those of you that have been in any of my technical analysis classes, I didn't do a very good job with that line. If you have been in one of my technical analysis classes, you know that my skills for art are not great, but you could see a definite level of support that it has bounced off of. And then conversely, up here, you had that double high, right? So double highs are bearish, double lows are bullish. So, that is encouraging because I'm sure some of you are wondering, well, now that we've had this recovery, are stocks too expensive on a relative basis? They are not. Software stocks continue to struggle. Down here, look at that relative to like semiconductors, which have just crushed. So, are we expecting a recovery in software? I have been, and we haven't had it yet. So, you know, is AI permanently going to displace software? If I knew more about technology, I'd give you my outlook, but I don't. I'm just like most of you. I'm sitting here watching the stocks fall, looking for an entry. Now, we did see a recovery with Microsoft. Microsoft's a software company, and we've seen recovery on some other specific issues, but it has been universal. You want to follow the earnings. That's what I tell people. So you've got the Magnificent Seven, which basically has been counted out. Well, for the first quarter of this year, we're expecting the Mag 7 earnings to grow 22.8%. So I don't know, where do you want to put your money? Always follow the earnings. It's been said earnings are the mother's milk of the stock market. So here's market sentiment, but this was as of the 15th. So that was 5 days ago, before we had this big move. And you can see the sentiment was not great. At that time, 31.7% were bullish compared to 42.8% who were bearish. I'm sure that'll change next week. And look at the fear greed index. Speaking of change, so a week ago, we were in the fear category. A month ago, extreme fear. Now we're in the greed side. I've always said it, investors are fickle. And that's fine. They make it interesting. So greed typically causes people to buy, fear to sell. So that's generally a pretty good omen as long as it sticks. Future of interest rates. So we've actually had a change here. And, um, I've been telling you that coming into this year, we are expecting two rate cuts. And then oil went and shot up, and that's inflationary. Rate cuts came off the table. But now I'm looking at this, and there's about a 50-50 shot that we could have a rate cut in January of next year. Now, at one point, we weren't forecasted to get a rate cut until December of next year. So I'm seeing these possible rate cuts getting moved closer. Now, I'm sure a lot of this is going to have to do with the inflation data comes out, but the stock market loves lower interest rates. So that's great news. This week's earnings. So, what do we have that looks kind of interesting? I'm looking for potential market movers. So, we got Tesla will be coming out with their earnings. IBM, there's another biggie. Boeing. I always am interested in what Interactive Brokers is doing. Capital One will be interesting as they talk about the consumer and how the consumer is using debt. On Thursday, we have American Express, Intel, and on Friday, I don't really see anything that's going to move the market. So we're starting to little by little creep into earnings season. This is really the second week. And so we're a couple of weeks away from the really big announcements. So this is sector performance year to date. The S&P 500 is up 3.74% as of this recording. The big winner, of course, has been energy, followed by materials and industrials, REITs, utilities. All those have had a great year on a relative basis. Staples, communication services, and tech, that's slightly better than the S&P. And then, kind of pulling up the rear, healthcare down 4.4%, financials down 4%. But financials are starting to make a comeback. And I told you that's sort of my sector to watch. News of the week, like I said, there's not a ton of it. So nothing of note today. Tomorrow we get retail sales. I mean, you want to keep an eye on whether consumers are spending money or pulling back. Tells you really more about consumer sentiment than it does anything else. Nothing on Wednesday. Thursday, we get our initial jobless claims. Came in at 207,000 last week, which was very encouraging. It was forecast to come in at 215,000. So for this week, they've lowered it to 210. We get purchasing managers index, both services and manufacturing numbers coming out on Thursday. And then consumer sentiment. It'll be interesting to see how that ties in with retail sales. So that's what we've got for this week. Let's take a look at the charts. So the first thing that I want to focus in on is the S&P 500 right here, which, even though today has been a little bit of a down day, this still looks great. I told you last week that this trajectory, there's not a chance that that is sustainable. So, today I would assume the market is responding to the news in Iran. But even if that wasn't happening, a little bit of a pullback like this should be expected. But we are well above the 7,000 range, which was right in here. That was kind of the next hurdle for these markets to go higher. Now, keep in mind, we are definitely in a news-driven market. So, depending on what happens with Iran, that could have a big influence, obviously, here. And then I always like to check in on the VIX. This is the volatility index, which is up 9% today. So you can sort of see the normal trading range. And right now, we are over here. Make sure everybody can see that. So we had a little bit of a bump today, but we're still under 20. And anytime you're under 20, that's indicative of a fair amount of complacency. People are feeling okay about things. So there you have it, my friends. Go out, enjoy the rest of your week. Let's hope we get some resolution in the Middle East. Wouldn't that be lovely for mankind and the financial markets? In that order, by the way. So I will be with you next week. Until then, be safe, be blessed, and bye for now.